Hi everybody, Ed's back. Hey, how's it going, Mr. Ed? Um, Wanted to show you guys how you could have made about $1,500 in crude today, trading one contract, which ought to be attractive to anybody using Murrey Math Lines. If you're not familiar with Murrey Math Lines, there's tons and tons and tons of stuff on the internet. I've got a couple of videos, actually more than a couple of videos on Murrey Math Lines, how to set those up. Um, Let's go through the setup for the charts very quickly. I've got a 550 trade chart, which is a 550 tick chart anywhere else, but uh, Sierra chose to call it, number of trades per bar. So I've got that set up. The Murrey Math Lines, I've got all my, basically my London high, London low markers, that sort of thing, my daily targets, which I've hidden for the moment. I've got all my other stuff hidden. Here's my setup for the Murrey Math Lines. I changed it. I usually use a 64 square width, but I changed it to 128 square width with a look back period multiplier of 1.5. And the reason why I did that was because crude oil tends to move a lot. So I wanted to make sure that the Murrey Math Lines would capture that range. So here we are at pit open. Let me explain the strategy very quickly before we get started. The strategy is that you wait to take, for example, a short trade if you want to go short, or if you want to go, well, let's take it from the long side, and I'll take it from down, say for example, from down here. If you'd have gotten in at midnight, you would have gone long. You go long when price breaks above the support line, which is 53.13. You set your stop loss at 1 or 2 ticks below the support line, which is 53.03. Okay. If you'll notice, price action, if once it broke above that support line, it didn't come back down and break the lower support level. So the London low right there was 53.06. So you were safe at putting your stop loss at, say, 5,300. Okay. So you put your stop loss at 5,300 and you get into a long position. So your long is at 53.13. Now, if you're trading more than one contract, what you do is when price action hits the major support resistance line, or in this case 53.52, you take one contract off, or you take half your contracts off. And then at that point you can move your stop to break even plus whatever. Break even plus whatever, how many contracts you're trading. At that point, it becomes a no-loss trade. So if it comes back in your face, which occasionally it does, um, if it comes back down and tries to take you out, at least you were in a no-loss trade. Um, if you're trading more than one contract, you would usually take, like I said, take half off here. If it comes back in your face, big deal. So what? You've at least you've got those ticks. Okay. Now and then you can get back in once price action dips down below and then back up above the support line. So at this particular point in time, if you would have gotten into a long trade out here, you would have taken half of your contracts off right up here, moved your stop to break even plus whatever, and then ridden it up. It hasn't hit resistance yet, um, but it will here in a minute. The short position would be exactly the opposite. You wait until price action comes above your resistance and usually comes up to overbought or reversal or somewhere up in here. And once it drops down below that resistance right there, that's when you get in your short and you place your stop loss at resistance plus 1 or maybe a tick or two above that, 5,400. If it takes you out, if your stop loss gets taken out, you repeat the process, rinse and repeat. Okay. Occasionally it will. Occasionally it'll come back down. Here you can see that it came down to that level, the Asian high, the Asian low. It came down to that. It tried to come down to the level. It didn't quite penetrate it. So your stop loss would have been it would have been fine if you'd gotten in after, say for example, after midnight, gotten in anywhere. You could have gotten in there. Um, since it came up above right here, you could have gotten in long there. You could have gotten in long there. Just rid it up. Okay, and just sit back and watch. see what happens. So for today, I'm going to speed this up a little bit. This was pit open. Market started moving back down to support the major support resistance line, down to 53.62. Hold on, let me take the dome off so you can see a little clearer. Now, we're still not in a trade because we haven't met our trade conditions yet. Remember, you gotta come up and then back down, or come down and then back up through support or down from resistance. So we're sitting on hands, watching, waiting. No big deal. I mean, if it's a range-bound day, if you're trading between support and resistance, do you really, if you're like range-bound, do you really want to trade that stuff? I mean, that's nasty. It can be problematic trading that. I know a lot of guys that have significantly damaged their trading accounts by trying to trade the chop. So this will kind of keep you out of the chop here. So here we go. This is cash market open, general market open. Here we go. Remember, you could have still been in a long position if you get out in a long position before, down here at say 3, 4 o'clock in the morning, and just ridden that up. You're waiting. You come back down. You're waiting. See what happens. If it comes back down, then you still got this right here that you got in the bank, ticks in the bank for you. Okay, here we go. It's going back up. And, okay, it's about to, looks like it's trying to push through 53.91. And that's when you would take, 53.91 is when you would take your remaining contracts off if you were long and close out your trade. Okay, 53.92, you would have gotten filled. Okay, so let me pause this here for a second. So from 53.13 to 53.91, that's what, about $800 right there? Just under $800 trade per contract. So that'd been a nice trade right there. And you could have set your trade up and gone to bed, not worried about it. So here we go. So 53.91. So we're waiting for a setup. Remember, waiting for a setup here. We've got, okay, we're going up, overbought, still not in a trade. You don't take this trade because you've already made your ticks on that long. Okay. So what I might do at this particular point is I would set that's 53.92. I'd set put a sell limit order in, and I can put that in right here. I'll put a sell limit order in here. Ah, darn it. It put it in up there, didn't it? I set that up wrong. Let me go ahead and clear that out. I think that would be like a sell stop order, something like that. Okay, there's a sell stop order. Okay. So you set it up to where when it comes back through here, you would sell. Your stop loss would be right up in here at the top of resistance, 5400 and 53.91. Okay. You would put your target down here at 53.13. So I'm at 53.13. So we let her go. Price fills around, I can't remember how far it went up today, 54.20 or 30 or something. Maybe a little bit higher. So comes back down, comes down through resistance, 53.96, coming back down. It's flirting with with the top of our resistance zone. Once I get filled, I'm going to speed this thing up because it took a little bit of time to get down to our fill point today. There we go. Okay, we're filled. We're in. So here we go, down, down, down. You'll notice it didn't pop back up to our stop loss. So Once we hit that major support resistance, we can move our stop loss to break even plus 1. Okay, so let's go up to 160. Let's make it a little bit faster here for things to go. Notice it fiddles around and chops around and chops around. That's fine. Now, if you were trading more than one contract, you would take one contract off. Okay, you would take one contract off here at major support resistance. Okay, and then move your stop to break even plus 1 or plus whatever many contracts. Since I'm trading one contract, it's break even plus 1. Okay, so my stop loss is now 53.90. My entry is still 53.91. My target is still 53.13. Okay, came almost down to take it out. Almost down. We're not filled yet. Not filled yet. Came down. Just, this is a game of this is a business all about patience. It's all about patience when you're doing trading, and the fortitude to accept a loss every now and then. Okay, there we go. We just got filled. We got filled for 78 ticks. That's $780. Trading from here to here. Now what we'll do is we'll set up for the and this was, by the way, this was that short when there was an announcement this morning at 11 o'clock. I can't remember what it was. It was an announcement. You would have already been in the trade. Before the announcement came out, if you'd have been trading multiple contracts, you would have already taken half your contracts off here at major support resistance and move your stop to break even plus whatever. So if the trade came back in your face, then you still would have been protected because it would have taken out your stop loss, and you're basically in a loss trade. You'll notice that price action popped up here, but it never took out your stop loss. Well, the reason why we wait until the major support resistance line before we move our stop loss is to make sure that we don't get a bunch of this jitter and a bunch of this junk here and it coming back in our face to take us out. Because this would be a little bit of a buffer zone, a cushion zone, not to take our stop loss out. Once we come down here, price actions move far enough down that if it comes all the way up here and takes our stop loss out, at least we're in a loss trade. So we would have taken one contract off there. I didn't. I'm just trading one contract. Bam, we got filled at support. Okay. So what we'll do is we'll wait and set up for the long. Okay. So I want to put, now that we've dropped below support, drop below the support zone. Okay. I want to put a buy up at 53.13. I want to put a buy stop order at 53.13. There. Okay, 53.13. Want to set my stop loss at support, which is 53.03. And my target back up here at 53.91. Okay? So let's see what happens. I'm going to slow this down just a little bit. Let me go back to 30. Okay. So we're playing. We go down. We go down. Still not in trade. We've already closed out of our trade. Here we come. So we come back up. We'll come back up through support. Sometimes people like to wait until the first candle after support, and you can do that. In fact, I would encourage that. Wait until, since we're trading a 550 tick chart, you can wait until the first candle closes. You won't make as much money, but it will help you in the situation that I'm going to show you here just in a minute. It will help avoid the situation that I'm going to run into here just in just a second. Okay, I just got filled. Okay, watch this. Just got filled. Okay, I didn't wait for that bar. I didn't wait for a candle up there. Okay, now I got a candle. It closes. What does it do? Watch this. It'll play around down here and pulls back and bam, just hit my stop loss. Okay. Um, Shorter fills. Okay. So I lost 10 ticks on that trade. Okay. So instead of having 78, I'm down to 68. Okay. So okay. So I'm back running again. So I took out my stop loss. So what do? Yep, try it again. Let's go. Um, what happens is look at the trend. The trend is up. It just came out. It was just a pullback and it came out. Took out my stop loss. It happens. Okay. So I want to put another buy stop order here. Again, putting in. I'll put my stop loss in down here at 53. What is that? 5303. Yeah, 5303. Software would automatically do this, by the way. It's better to do it automatically instead of having to do this. And software can be written for various platforms to do this sort of thing and implement the strategy. So, where's my limit order? Oh, there's my limit order. Here's my buy stop order, and I want to put it up at resistance. Okay, up at 50 again, up at 53.91. Okay, so let's play her again. See what happens. So we're fiddling around down here. Okay, now I'm in. It pulls back a little bit. Pulls back again. Fiddles around. You can see that thing fiddling around a little bit. Couple of ticks. I should not get stopped out more than once. Sometimes I get stopped out twice doing this, but usually not 3 times. Okay, now we're going back up. We're going back up. We're going back up. We're going back up. Okay. Here we go. We're up 20 ticks. We keep going. It is, what time is it? Okay, 12:30 New York time. Comes back down a little bit. And I think this was, as I recall, I think this was news. There was some sort of news that Saudi Arabia came out and said we're going to decrease oil production like 400,000 barrels or something. So it drove some news up today. So we're up $1,000 right there. Okay, we hit major support resistance. So we'll move our stop to break even +1. There's break even +1, and let her go. See what happens. Now I'm going to speed this up a little bit because I knew what happened at the end of the day. You'll notice that the Murrey Math Lines have not shifted. They haven't shifted all day long. So I want to keep my eye on this guy because I want to terminate the trade at pit close. And I have software that automatically does that for me. 5 minutes before pit close, which would be at 2:25, automatically will close out my trade for me if I'm in any trades. And that's so that if I'm not in trade after pit close because it's a real pain in the butt to do that. See, Murrey Math Line shifted down a little bit and then they shifted back up. And that sometimes happens. I saw that a little bit earlier in the day. 1423. Let me slow this down a little bit. So we're coming up on 1425. I'll pause it and then I'll go ahead and flatten the trade. Come up here, we're almost to 53.91. Doesn't quite make 53.91, but it almost hits 53.91. And I usually close out my trade right before, about 5 minutes before close because um, right between 5 and 10 minutes before close. Things tend to get a little bit crazy sometimes. 4, 5, 6, and let me slow that down a little bit there. Okay, it's 14:25, 5 minutes, so I flattened my trade. So I got basically 139 ticks. So there we go. So we threw a loss. We threw a loss here of 10 ticks. We had 3 trades. Um, one was first one was 78 ticks. And you know what? If you made $780 and wanted to walk away for the day and be done with it, hey, there's no shame in that. That's cool. Um, you want to make a little bit more money. You got in here. You got stopped out 10 ticks. You got right back in the trade, and there it went. Pit market close. And by the way, it never came back. It didn't come back up to 53.91. You probably had to hold overnight for it to go that far. So anyway, and let me stop this, and um, you can see that it's pulled back. I'm sure it's going to go back up there, but it's pulled back for the evening. The evening session might drive it up. So if you wanted to hold it overnight, you could certainly do that. But I don't like to, I don't have a large enough account to hold overnight. And I know a lot of people who do not like to hold overnight just because of the uncertainties um, in overnight trading. You get up the next morning and you find out your entire account's been wiped out, which isn't good. Anyway, just wanted to show you guys how you could have worked this for, what, 139 ticks. What's my trade activity log say? And my trade activity log says, there you go, gross profit $14.90. I lost $100. Made $1,390 on 3 trades. So that's $13.90 minus 15. So what, $13.75. So you would have walked away with $1,375 for the day, which is a very cool trade. Anyway, see you guys next time. If you have any comments or questions or anything, feel free to post. See you next time.